Hi everyone, I wanted to do a video on a lower time frame because the focus has been sort of heavily on the 4 hour and daily time frame for a while now, and prior to that we did a lot of stuff on the 60-minute time frame. This is just a 30-minute time frame, and essentially it's the same process, participating in the movement of price, buy in when there's evidence that buyers come into the market, and only managing buys when that condition changes to sell. So, very simple. Your rules for entry are the same as your rules for exit, and the edge lies in the movement of price. As long as price moves, then there's your opportunity to make profit. So this example is on the 30-minute chart, pound dollar from today. You can see I've marked out the Asian session here. This is when you're sleeping. If you're trading a European and an American currency, you don't really want to trade when both those zones are in sleeping. So we wait till London Open and wait for price to break out of this Asian range, and then we start our simple process of taking trades. So our first trade, you can see evidence of buyers coming into the market by a close up. So we look for a breakout long, and we get our first entry of the day there. So we're in a long trade, and we're not going to manage or exit that trade until we get evidence that sellers have come into the market, and that comes here with a bar closing down. And now we can manage our short and set a manage our long and set a pending short. There's no real profit there, so we just go into the hedge, and then we wait for price to break out of that hedge. Our last trade was short. If we get a direction change again, then we can trade within the hedge. So we have a long here which triggers, and that one stops out. Our last trade is still short, so we're only looking for longs. We do get two more bullish bars here, but no breakout. And then finally here we get another long. So now we have two long positions and we have one short position. And I think here we would have just tapped out this short here, and then we get another change in direction, bar close down. So the inner trade here, I will just TP at the close. So we've taken that profit there, which has covered part of our loss so far. And then we get back into a hedge with a short here and still holding the original long from this morning. Price reverses again, and we have another long set up here. We go long, and then price finally makes its move. Our other short stops out, and our two longs run up here. Here's our evidence, sellers coming in the market, so we TP this long, and at this point you've got a decent profit for the day. You could close them both out and call it a day. So as you can see, price always does this: random walk, levy flight. Sometimes it might do levy flight, random walk. Sometimes it does levy flight, random walk, levy flight. It's always the same process, switching between one and the other. Whenever scientists look at charts, this is the conclusion they come to of the pattern that liquid markets make: random walk and then levy flight. And this system is designed to take advantage of that without using predictive analysis. You don't have to time the market, if you like. You just need to participate and manage your trades in a logical way. Buy in when buyers come into the market, sell in when sellers come into the market. And obviously those are the obvious points to manage any open trades as well. So I hope you like the video. It's just a real quick one on the shorter time frames, because I know that's quite popular with a lot of people. Any comments, leave them below, and I will see you all soon.